All right, greetings traders. Sam here from TradeDevils.com and Trade Devils Indicators. Today we're looking at our latest template. We're affectionately calling this the visual order flow or the graphical order flow. Essentially what we're trying to do is give you all of the insights that we can glean from a footprint chart and then apply that to a standard candlestick chart without getting overwhelmed by all of the detail and the bid-ask information that's contained within a footprint chart. Now, not that there's anything wrong with a footprint chart, but it can be quite overwhelming, and it takes much training and expertise to really be able to trade with it successfully. So what we're trying to do here is give you some of the benefit of what we can glean from a footprint chart at significant pivots that would help us make a trading decision as to whether or not we have some slight edge. So to break this all down, I'm going to have to do this. Likely this will be a multi-video series here because it's a combination of first just understanding what's on the chart and what's the technical components that are behind it, and then applying that so that we can extrapolate that information and make better trading decisions. So before we get into that and we break these components down one at a time, because there's much more going on here in this chart than would be obvious to you at first glance. So with that said, we're going to circle back here as we put this all together. But let me start over here. I'm just going to use just a rudimentary, all I've done here is just turn the candles into a line here because I don't want you to be distracted by that. So here, this is we talk about this a lot at Trade Devils, whether we're looking at crypto or whether we're talking about day trading in the stock indexes here. But so I've been kind of harping on this a lot lately, just because I think it's helpful to break the market down this way at its absolute basic level, right? All the market ever does is swing, retrace, and then one pivot breaks, right? So we swing, retrace. Now our natural bias here as traders, if I draw that swing and that retrace, my guess is that in your mind you finished it up here, right? But certainly we've got a low and a high. We could certainly break the low down here. So this is the question we're always trying to ask ourselves. Right here, if I just leave that right there, do we have enough to make a trading decision right there? Well, here, get off of there. Perhaps, right? But what's missing is the context. Now, you could say, well, okay, let's say that's the opening bar, right? And we're just this is the first 5-minute swing high off of the open here in the ES or stock index, whatever it may be. Now, so the question becomes, once that starts that retrace, when we get here, and you might say to yourself, well, that looks like a 50% retracement. What information can we get there at that moment that would lead us into making a decision there, or give us a sense that we had some slight edge that would imply that the market is moving higher? Because, of course, we could get a reaction there, and the market could go there, but it could just as easily from there roll over here. And of course, now we're taking that same pattern here that I just drew, and we're just now turning it upside down, right? So if we're thinking this, but within that there could be this, and this could. I'm just going to switch to an arrow here. Then we could still do that, right? So then the pattern is still there, right? It went deeper, and within it, we have the same pattern repeating. Again, so as I tell you, that's all the market ever does, right? So I think there's benefit in breaking it down this way. Now, of course, I'm drawing these here in idealized format, right? We could swing here and do this, and then carry on, and then do this, right? I mean, obviously, right? If you traded, you see the market do this all the time. We could come up here, we could double top, and then we're coming down here, but we're still within this low and this high. It's this constant series of, at that retracement point, what additional information can I extract from the market with the tools that are available to us here in 2021? Where oh God, I mean, 30 years ago when I first started as a broker in the industry, to get the kind of detailed information that we have now, well, we could only dream of that, right? That was only like 30 years ago. You had to be on the pit, you had to listen to it, you had to see it amongst the pit traders. Now we can actually see what's happening there. So with that said, there's a little more here, right, that we want to kind of talk about, because this is what every trader's dealing with here, and we're trying to help you deal with the same things that we all deal with here as you come up to every pivot, because every pivot in the market is a question mark in our minds, because we know here, if let me draw this over, just do it this way, bring this back here. Okay, so we've got a swing, we've got a retrace. Now, we know very well, right, anyone who's traded for any bit of time, that every pivot is significant to the market, because something had to happen to cause a change to create the pivot. So if we just carry this forward here, and we start here with the retrace here, and our bias, for whatever reason, let's say we're thinking higher. Well, of course, the first question we have to ask ourselves is, do I see enough of an edge here to where I'd be inclined to take a long there? Now, if you did take the long here, we start to approach that pivot. Of course, what happens here is critical to us, because every pivot is a potential double top or a double bottom. So as we're approaching that pivot, what are we thinking? As a trader, well, ideally we've entered down here, so we already are in profit as we approach the pivot. Something that I do a lot in the course content that I teach, I will, and I harp on this, that is a terrible place to enter the market. Terrible. There's no way around dealing with double tops but double bottoms, right? It was just the nature of the beast here. So as we approach that, what do we know? We know for a fact that sellers had to overwhelm buyers to create the retrace, right? So we know that there are sellers that took that down here that are now in profit. So as we approach that pivot, the potential here for a double top is significant, because the traders that sold it up here are likely in place to defend that. Now, on the flip side of that, if you're a buyer, you know that there are stops up here, because I mean, it'd just be a reasonable deduction here that the sellers that are in profit here, at the very least, they've tightened up their stops. So there's likely to be a collection of stops up here. So the bull is thinking, and the breakout trader is thinking, oh, well, if we can pop those stops, because there'll be buy stops here, well, that's fuel that could take us up to complete the pattern, right? And certainly nothing says we do it in this idealized fashion, right? Well, we could do this, right? We could do this and then be down to a new low, right? So it's just this constant battle we're dealing with. So as we approach that, we've got to recognize that we want to get as much insight as to what's happening there as we got down here. The difference is, if we were buyers down here, now we're at least dealing with house money here, right? So if we get rejected here, and this just gets, it's just a classic double top, right? Which of course happens all day long, every day. I mean, here we just look over here. Here's a double top. Here's a double top. Here's a double bottom. Double top, right? It's just all day long. We're constantly dealing with that. What kind of insight can we get as to what's happening right here? Are sellers going to defend and overwhelm? Jumpy here. Are sellers going to overwhelm and drive that down, create the double top, right? So this would now, we would have established a resistance level, or do those stops just become the fuel that fires it up? Buyers, breakout traders all pile in here, and the market, while it might have a reaction here, eventually we get through, right? It has to get, we're not going to go sideways forever. So what can I glean from what's happening internally in the market here as I approach that pivot? And is there enough here to get up here? And if I get here, well, I have the foundations for a trend, right? So now, of course, this could be in the context. That's why context is so important. If we're doing something like that, if we've reach this at this moment in time here, well, can we say anything about trend here, right, based on the information that's right here? Well, perhaps at varying degrees, because if we've been coming down here and then we swing up, well, it's the same thing. You might think, oh, I'm making just eyeballing this, well, I'm making a 38% retracement, and this is just going to carry on in the trend, and we're going to complete the pattern this way, right? If we do this, well, you're still not out of that decision matrix here, because we have this pivot to approach, and we're looking at this saying, well, if this smaller degree here gives us the foundations of a trend, because I've got a pivot, I've got a swing. Now at this moment in time here, I don't have enough to call any kind of trend direction here, because all I see is that I've got a lower high from this pivot. Once I put in this pivot and I start to move higher, now I've got a higher low. I break this pivot, now I've got a higher high. So I have a micro trend has established here. Now, ideally, it would need to carry on, and we'd get it like this. So we'd get another higher high, pardon me, another higher low, and then another higher high. Right, but we don't know that that's coming, because at this moment in time, as it sits right there, that I've got a swing high, I've got a low. This, if it rolls over and starts to head that other direction, what do I have here? I just have this just becomes a lower high relative to that high. Now I get a lower low here. So every time we approach a pivot, we're constantly looking. We need information. What's happening there? Who's the aggressor? How does the market respond? And this is happening all day long, right? We all deal with this. This is just the inherent nature of what the trader's paradox, right? Is it double top, breakout, rejection, new high? Is it a trend? Is it part of a larger trend? Is it just a retracement in this case here, which would be a larger trend to complete this way? Over and over and over. Every pivot, every swing, every retracement, that's the challenge. What can we glean from each one of these pivots here to help us make better trading decisions, knowing we're going to be wrong a high percentage of the time, right? Nobody knows what's going to happen. We can just make some deductive choices here based on information that we can now get insight to here. Now, of course, the traditional way that you would do that, in modern trading here, you might look inside the footprint chart to say, okay, who at that moment in time is more aggressive, right? I think we say that, which ties us back to the delta of that bar. Who's the aggressor, right? Market orders are what move the market, right? So we understand that it's the flow of a bunch of sell orders come in here. They would be referred to as the aggressors here, because they're more anxious to get short the market here, as opposed to limit orders. Now, of course, larger traders are going to be using limit orders, but when we see the market move, it's predominantly what you'll find is that there'll be an abundance of market orders here that will drive that create that movement, because they are showing themselves to be the aggressors. Right, so with all of that said here, which I know is just very rudimentary here, but I want us to take that thinking then, and then as we apply it to the chart, every one of these decisions is critical to us in terms of what our next move is. Is it time to exit the market here, or is it time to be looking at a possible add? Because right, if I take this out here, do we have that foundation here to where we could say, oh, we've got the start of another trend? So now if I come down and I retrace to right here, now, I had prior resistance here, but now this has become the support, because at this moment in time here, buyers had to overwhelm the sellers, right? So we ran the stops, buyers overwhelm here. So now as the market is retracing back here, just like at this point in time, oh, come here. At this point in time here, we had to wonder whether sellers were going to defend here, and would they be able to defend to create the double top for this to head lower. Now the same thing happens, but right as the market ebbs and flows and support becomes resistance. Now buyers had to overwhelm; they had to be the aggressors to overwhelm the sellers that would be there defending. Run those stops, take it up. Now, as we come back down here, do we see the same thing happening? Now the buyers here that are in profit here, will they step in and defend there and drive it up so we get the foundations of that trend? So we get a higher low, higher high, higher low, higher high. Right, this all day long, this is all traders, this is at our foundation, that's all we're ever trying to do. What happens up here? Do I have a potential double top up here? Well, it's always, right, as you approach a pivot, it's a potential double top or double bottom, as the case may be. Can I blow through that? And then in turn, would they, as it comes back here, now to the same question. Right? What can I see in here, in this bar, in this price action here? Because an indicator is not going to be enough, right? An indicator lags, right? So we need real-time information right there. So as I get a reaction there, I need insight into what's causing that, right? Are buyers more aggressive here? What's happening, right? So by the time an indicator, doesn't matter you have a zero lag indicator, it still it's a derivative of price, right? So there's always going to be a lag there, and for all we know, the indicator turns and then turns back the other direction. So it's looking into that moment of time and seeing who's the aggressor, right? Where we could get perhaps nothing more than an edge as to whether or not we want to put money at risk or not. Okay, all right, so that's enough theory there. So let me pause here now since we've gone through that, and let's come back to the template here, and I'm just going to strip it down to one component at a time. Okay, so stand by.